Hey guys, happy Sunday. I hope everybody had a great weekend. In this video, a little bit of something different. We're going to talk about a penny stock, and I do not typically talk about penny stocks on my channel due to the extreme risk. And today, the one that we're going to be covering is called Railtown. It's a Canadian company. The ticker is RLAIF. It's an OTC stock. Why am I covering it? Because this is a little bit of a thought exercise for you guys. There's some test questions here, whether you're invested in the company or not, but especially if you're invested in it, I want to give you a couple things to think about. We've been talking about Railtown in my Discord for quite a while. It's had a good little run up here. I shared a supply zone and demand zone chart a few weeks back saying, watch for a push through the supply zone because it could have a little run after that, and we did get that. This is a stock with a free float around 100 million shares and very low volume. So it's not a short squeeze play. There are no shorts in this stock. It's just a lot of people buying because it's being promoted on social media, and not a lot of people selling, so the price has been getting walked up. The interesting thing to kind of think about here with Railtown, it is a AI company. It has a product which is kind of like an AI pilot to aid software developers. I think it seems like a legitimate product, although it's been out for several years in different versions, and the company has not yet been able to monetize it. Even though they've been saying for several years that they were revenue ready, this company still has no revenue. I do want to add at this point, I've been sitting on this video for a while because I reached out to the CFO of Railtown and investor relations to ask them some questions, some very direct questions, and they have failed to answer me. Both the CFO of Railtown and investor relations email accounts did not answer me at all for some very basic investor related questions about their products and about their company. And that is disappointing when a company does not get back to you. Again, this is why I call these type of plays high risk. You're putting all of your money in a company with no revenue. Why are people doing that? Because Railtown issued a press release in February of 2025 that they were going to acquire a larger entity called AIP, AI Partnership, another Canadian company. I'll put a link to that press release in the video description, but I got a couple of highlights here on the presentation, and I'm not going to read through all of them because I'm not trying to pitch this stock to you, but if you want to pause the screen and read it, you can do that. And a couple thoughts about RLAIF. As I said, they have actually 139 million shares outstanding. The free float is around 100 million shares. Shares authorized is unlimited, and including warrants and options outstanding, the fully diluted share count would be 172 million. This company does not have a lot of cash, under 2 million Canadian, and working capital is just over 1 million. As I mentioned, zero revenue. The most recent quarter, they had a loss of 306,000. It would have been 761,000 Canadian, but they had a non-cash gain due to a warrant fair value change. In the trailing 12 months, the net loss $7.6 million. Again, this is a company with under 2 million in cash right now. Working capital just over $1 million. In the last 12 months, they had almost a $8 million loss. I want you to do that math, thinking about if this thing with AIP doesn't work out, what is the most likely thing to happen next with Railtown? Hint, hint, the need for cash. Not surprisingly, as the bottom bullet says here, the company has a going concern warning because they are a non-revenue company. I went through all of the filings of Railtown and made this little chart for you guys just to show you their historical dilution rate. Back in 2019, it was 50 million shares outstanding. They're up to 137 million now, and you can kind of see the rate of change over time because the company, to stay alive, needs to keep selling shares and getting some liquidity on the balance sheet. That's why they're on the public market, and you should expect that to continue as long as they are a no revenue company. This is not a short squeeze play. 133,000 shares short out of 100 million free float gives them a short interest percentage of under 1%. I don't think anybody's calling it a short squeeze play, although I'm sure they will at some point. I just like to throw that up there just so we get that base covered. And moving into the real question of this video, the acquisition. Analyzing this acquisition could be kind of fun, right? Because we have a company with no cash and we have a company with no revenue that is theoretically going to be acquiring a larger company that I'm told by these social media promoters has revenue, maybe in the scale of $200 million or more. I don't know. Depends on who you believe out there on social media, right? But let's just assume that AIP has, as they are saying on social media, 200 million in revenue. In February, Railtown announced the memorandum of understanding, saying that in coming weeks, they would update shareholders with more details in a letter of intent. We really don't have a whole lot of details. We don't know the financials of AIP. We don't know the structure of the deal. And this stock, RLAIF, is being promoted, and people are putting tens or hundreds of thousands of dollars into this non-revenue penny stock under the belief that this acquisition, which may or may not happen, is going to fundamentally transform RLAIF. And maybe it will if it goes through, and maybe it will if AIP has revenue and has profits. But we don't know any of that right now. So for me, to encourage people to put their life savings into this penny stock, pretty ballsy for those of you that are pushing this stock. And I hope it works out for all of you. Canaccord Genuity is involved in this acquisition analysis, according to the press release in February from Railtown, to facilitate the transaction. And so that tells me a couple of clues also about how this acquisition might go down. The real question I have for you, though, is how. And this is what I want you guys to think about and even answer down in the comments, or make your own video if you're promoting this acquisition and this ticker. How does Railtown, a company with problematic liquidity, insolvency, a going concern warning, low cash, and a high cash burn, acquire the private company AIP? What are the mechanics for a company with no resources to acquire a bigger company that theoretically has revenue and profits? How does that happen? You might also ask why, and I think the why is pretty easy to guess. AIP is a private company, and it likely wants access to the public markets to raise money, to go sell shares, to help grow the business. And doing a deal with Railtown could facilitate AIP getting more rapid access to the public markets. That would be my thought about the why, but let's dig into the how. The number one answer I come up to is through dilution, right? Railtown issues shares to the shareholders of AIP, a substantial amount of shares, more than likely, if AIP does have revenue and profits. And then the AIP shareholders become majority stakeholders in the new entity because they have all the value in the deal, right? They have the enterprise value, the revenues, the profits. Railtown brings really nothing to the party. There are some other ways, non-dilutive, that you could structure a deal: asset swaps, third-party financing, pipe investing, bonds, things of that nature, third-party financing, debt, non-convertible preferred shares, which pay a dividend out to the AIP shareholders. You could do an earn-out structure, liability assumption. We're not even going to get into that. I don't think it's not going to be an outcome in this deal. And then there could be a strategic partnership or joint venture. And I have the final slides listed in my Discord in the VIP section for those that really enjoy doing this stuff like I do. And I'm not going to show all of them on this video because I don't want to upset the Railtown people or mislead you into making any decisions. I want you, though, to think about how is Railtown going to acquire AIP? And I just put some probabilities that I think are going to steer the outcome. 67% probability of major dilution of current RLAIF shareholders. And then the other two that I'd focus on would be 15% chance of third-party financing, 10% chance of non-convertible preferred shares, and it might be a combination of all three of those. Could be. The more non-dilutive piece of the puzzle that you have, the less it hurts today's RLAIF shareholders. Once you decide how it happens, you need to think about how big is the dilution going to be if that's the way they go, and what is the market value of the new entity. And again, I can't tell you that. I don't think anyone can tell you that because we don't know what AIP is worth or if they have profits. So you're piling your life savings into RLAIF to become a minority stakeholder in a company with uncertain revenues and profits. I hope you see how the risk is stacking here. And I'm just shocked that people are telling folks to sell everything and put it into this OTC company because it's going to make them a millionaire. I'm shocked that people say that on YouTube, but it is being said, and I hope it works out for you guys. If you're in my Discord, the final slides where I walk through what I think is going to happen in terms of share price from a worst case, a base case, and a best case, those outcomes are in the Discord and the VIP chat. For those of you that are not in my Discord, I want to hear down in the comments, how do you think that RLAIF is going to acquire AIP? And how do you think it's going to work out for investors? Thank you for watching. I am Tony Denaro, and I will see you on the next video.